if the really important thing is crypto right now is $2.7 trillion industry. It'll probably finish this cycle at $10 to $15 trillion. And by 2030 or so, it'll be $100 trillion, right? This is the largest, fastest accumulation of wealth in all human history. Here's your opportunity. You can make 100x, 1,000x, 10,000x. We've seen them all in the last 2 months. It's simple. Number go up. That's the whole crypto thematic that you need to know. You can either do all the deep dive, and I must have done 10,000 hours on this, and I might be at the right side of the curve sometimes, but I don't mind being the left either. Just don't overthink it. The moment you overthink it, that's when you get yourself into trouble and you start not seeing it for what it is, you see it for what you want it to be.
The Bitcoin halving is quickly approaching, with many investors and institutions expecting a massive increase in Bitcoin's value afterward. Real Vision CEO Raoul is one of the many investors who share this bullish anticipation. In his latest interview, he explains why he believes this revolutionary asset will soar after the halving. Pal sees cryptocurrencies as the ultimate opportunity for substantial wealth, even suggesting the possibility of 10,000x returns. Now, let us watch clips of Raoul as he explains why the Bitcoin halving may just be the opportunity of a lifetime. While watching, please give this video a thumbs up, subscribe to the channel, and enable post notifications for more similar content. Be sure to stick around until the end of the video, where Pal explains why global crypto adoption is inevitable and will happen sooner than we think. Thank you for tuning in. We hope you enjoy it.
Let me show you a chart. I'm going to share a chart just because it's the best chart in the world to understand this. This is the banana zone. So what happens at about this point in time, what we call crypto summer, we have this little shuffle around the all-time highs, and then everything just goes bananas. So I don't care whether this is tomorrow or in a month's time, because to Phil's point, the number about to go up. And don't overcomplicate it. Everyone will overcomplicate this. They'll be looking at weekly charts, daily charts, hourly charts, tick chart. Just forget it. You should have a year plus to make a lot of money. This crypto market is the biggest gift retail investors have ever been given. Here's your opportunity. You can make 100x, 1,000x, 10,000x. We've seen them all in the last 2 months. And so of course it's going to attract people, and it's rational behavior because they don't have a way out. So even Phil, your example of Bitcoin going from 60,000 to 1 million, that's a 14x. That's not going to move the dial for somebody with 5 grand. So they have to take risk, and it's super risky and everybody knows it. It's a wedge right now, right? That'll be the last chance saloon. A mini wedge, but that's it. That's all you're going to get. And after that becomes unbuyable. And how long does that wedge take to complete? Does it complete this week? Does it complete in 2 weeks' time? Doesn't really matter. If you go to the ludicrous thing that Paul Tudor Jones mentioned a while ago, and Stan Druckenmiller talked about, is 80% of Bitcoin holders don't sell. It's the same with Ethereum, with the staking and everything else. So your actual supply is 20%, plus the miners. The miners keep getting halved every 4 years. So you've got no supply. So that's 20% of the let's say of the entire asset class, 2.7 trillion, is actually available to buy. You bring something like an ETF and things go bananas, right? The more people who adopt it, the more the price rises. Also, the really key thing is, I don't know if you guys have ever seen the chart from Fidelity about the risk reward of assets. It's brilliant. So there's this big white page, all Fidelity branded, and here's a cluster of all of here's the NASDAQ, and here's gold, and here's oil, and here's all of that. They're all clustered in the bottom. Then there's a blank page, blank page, blank page, blank page, blank page, dot, Bitcoin. It's a fucking alien asset class. We have never, ever had an asset class with this risk reward over a long-term time horizon and this performance in all of human history. It's pretty common around the all-time highs that, people take some chips off the table. We're seeing long-term wallet addresses taking some chips off the table. It's pretty common.
Yeah.
Ahead of the halving. Then it normally goes into what I refer to as the banana zone. And that's when you get the real price action. So the real price action hasn't happened yet.
Just last Tuesday, Raoul Pal shared his thoughts on the current condition of the cryptocurrency market on X, previously known as Twitter. Pal remains hopeful about the future of cryptocurrencies, even as major digital currencies have been experiencing corrections. On days like today, just remember that crypto is still being adopted at twice the speed of the internet and should reach something like 1 billion users by the end of 2025, said Pal. Despite this setback, Pal maintains a bullish outlook on the strength and possibilities of the crypto market. Previously, he also advised crypto enthusiasts to remain modest and not become overly confident. Research and patience are always needed to be well prepared for the next bull run. Despite the ups and downs of the crypto market, Pal's predictions point to a bright future for digital currencies, with ongoing rapid adoption rates anticipated. Let us now return to Raoul Pal as he further discusses the massive growth of Bitcoin and other cryptocurrencies.
So I discovered this chart back in 2020. And what it is the number of active wallets in crypto.com measure this, versus the, active IP addresses of the internet. And I always thought, well, this is a network adoption model, the same kind of thing. It's an adoption of a technology. And I wonder what they look like. And I put them over each other. And what we found was that, obviously, because the internet was the rails that already exists, the adoption of a new technology that uses those rails is faster. And it's actually twice the speed of the internet. So if you can get your heads around how big the internet was for all of us, this is happening at twice the speed. It's driven the fastest appreciating asset of all time. The compounded annual returns of, let's say, Bitcoin is about 150% a year, even with 80% drawdowns 4 times in the middle of it. We've literally never been given an asset like this with an adoption like this. And going forwards, if we just assume that the rate of growth just matches that of the internet from here until the end of 2025, we end up with 1 billion users. And if we extrapolate that out to 2030, we get to 4 billion users. So basically, this is a pervasive technology that's going to take over all of our lives in ways we don't really understand. It's not just going to be about investing in cryptocurrencies. It's just going to be the underlying rails of transactions. 500 million wallets. Now, people will say, well, they're not all active and everyone's got multiple wallets. I hear you. That's all a mid-curve take. Basically, it's growing massively. And if we looked at IP addresses, how many IP addresses do we all have? Mm-hmm. We have multiple. So it's just an easy way of referencing the growth. Wait till Taylor Swift has a token economy, or sports teams properly. You know, this is where it's going.
Yeah.
Right. We're going to a world where we will have equity in our culturally important things to us. In a world of AI replacing jobs, this is the future. You can't see it yet because it's super speculative and it's super early. But what we're doing is we're creating little mini groups of tokenized economies around ideas, memes, culture. We're tokenizing culture. And as you rightly say, Howard, this was a moment that people look back on, much like they'll look back on NFTs from last cycle. You know, NFTs in the end are going to be every single ticket, every single contract. Mm-hmm. But that was the start. It happened to be art. The really important thing is crypto right now is $2.7 trillion industry. It'll probably finish this cycle at $10 to $15 trillion. And by 2030 or so, it'll be $100 trillion, right? This is the largest, fastest accumulation of wealth in all human history. It's as simple as that. That's what that chart tells you. Now, what everybody does, and Howard, you explained, there is a bell curve. And you want to be on the left of the bell curve, which is actually the same as being the Jedi Master on the right of the bell curve. Everybody in the middle who overthinks it, it's simple. Number go up. That's the whole crypto thematic that you need to know. You can either do all the deep dive, and I must have done 10,000 hours on this, and I might be at the right side of the curve sometimes, but I don't mind being the left either. Just don't overthink it. The moment you overthink it, that's when you get yourself into trouble and you start not seeing it for what it is, you see it for what you want it to be.
In the 2020 halving, Bitcoin's price skyrocketed by 658%. While many are hoping for greater gains, It's worth noting that Bitcoin's post-halving rallies have had diminishing returns over the years. The first halving in 2012 led to a massive surge of over 12,400% in Bitcoin's price. However, subsequent halvings in 2016 and 2020 saw more moderate increases of 5,200% and 1,200%, respectively. This pattern of diminishing returns suggests that Bitcoin's average price rallies have decreased by 45% with each halving cycle, raising questions about its future performance. Nevertheless, if this trend were to continue, analysts predict a 360% increase during the next cycle, potentially resulting in a significant price of approximately $303,600 by the next halving in 2028. Meanwhile, in other news, Forbes reports that the Federal Reserve has quietly set the stage for a significant price surge in Bitcoin. According to Russ Mould, investment director at brokerage AJ Bell, Federal Reserve Chair Jerome Powell has cautioned about the possibility of delaying interest rate cuts due to persistent inflationary pressures. Despite this cautionary note, investors remain confident that a rate cut will occur at some point this year. So, what does this development mean for Bitcoin? Well, historically, rate cuts have prompted investors to pursue higher returns, positioning Bitcoin as an attractive alternative investment. It is often viewed as a hedge against the challenges of traditional finance and a means of preserving wealth, potentially leading to a surge in demand and subsequent price escalation. With all of this said, what do you believe will happen to Bitcoin's value for this year and the years to come? Feel free to drop your thoughts and analyses in the comments below. If you found today's video enlightening and want to stay ahead with more insights and updates on crypto and global finance, make sure to hit the like button, subscribe to our channel, and turn on post notifications. Your support greatly encourages us to continue providing in-depth content and discussions. Stay tuned for our next episode, where we'll uncover more about the fascinating developments in the cryptocurrency space. Until then, keep questioning, keep exploring, and most importantly, keep investing wisely. Thank you for watching, and we'll see you in the next video.